Hey guys, welcome to FreckleFace Finance, where we discuss personal finances open and honestly so that you can live the life that you deserve. So today we're going to be discussing long-term investing versus short-term investing and how you can pick which one is best for you based off your own personal goals, your risk tolerance, and how much time you have to invest. So if that sounds like something that you are interested in, then just keep on watching. Alright, so let's get started with long-term investing. So long-term investing is any asset that you hold longer than a year, according to the IRS. In accordance with IRS tax regulations, it literally is any asset that you hold longer than a year. Now, in actual application, this is going to vary between investor to investor. So a lot of investors typically will hold long-term investments for several years, not just 1 year. And then me, myself, and I like to consider long-term investments anything that I hold over 5 years. So that definition is definitely going to depend on what your own personal investment strategy is. But when it comes to tax purposes, anything that you hold longer than a year is going to be taxed at a long-term investment rate, which is good for you. But I personally like to keep my long-term investments for 5 or more years. So one of the advantages to long-term investing, like I mentioned, is that you're going to be taxed at a lower tax rate than you would be if you had a short-term investment. So as long as you have your investment for more than a year, you're going to be taxed at a lower rate as opposed to short-term investments. Another advantage is that you have more time to make your investment strategy work for you. So typically long-term investments have less volatility, which means that they are a lot less riskier. And typically when you look over a longer period of time, investments tend to increase in value the longer that you have them, if it is a good investment. And so just to put this into perspective, I'm gonna go ahead and show you guys a little snapshot of the NVIDIA stock chart. And then as you can see, although the stock goes up and down, up and down, up and down, over a long period of time with this snapshot, you can see that the stock typically will go up. And so that is very, very consistent across the board with many different companies. Over a longer period of time, consistently on average, the stock will progressively increase in value. And so that is the benefit that you have when you decide to do a long-term investment strategy. Now, with that being said, a con to long-term investing is that you're investing in a company and you're hoping that that company is able to withstand time for a longer period of time. So for example, if you were to invest in a petroleum company, like let's say a company that does oil, we'll just put Oxy up here for a second. If you invest in Oxy and that is a petroleum company and the world is moving more towards green energy and clean, efficient energy, then that might not be an investment that you want to invest in for a long period of time. Because the way that the world is moving, we're getting into electric vehicles, we're getting into electric power plants or wind turbine. So all of those things have to be considered when you're thinking of making a long-term investment, because you want to make sure that the company that you're investing into for the long period of time is going to be able to keep up with the fast pace that technology is advancing and that the world is moving into for whatever your investment strategy is. So if you're looking at something for 5 years, you have to see what the company direction is for that 5 years. If you're looking to invest in a particular company or your long-term investment strategy is the next 20 to 30 years, or you're looking for retirement investments, so that is considered a long-term investment strategy. If you're looking to invest in something for retirement, that horizon can be a lot further out. You know what I'm saying? So you would have to make investments in a company that you believe is going to withstand time for the next 20, 30, 40 years, depending on how long you plan to keep that investment, especially if you're looking at investing into it for retirement purposes. So that's definitely something that you should keep in mind and consider. Now, I do want to make this disclaimer for any of my new beginners or new to investing viewers that just because you have a long-term investment strategy and you purchase a particular investment for a long-term horizon, you definitely do not need to stay in that investment just because that is part of your investment strategy. Now, I'm definitely for sticking to the investment strategy, but if something is not panning out and you see that something is tanking, I definitely recommend that you're flexible and able to pivot in your investment strategy, keeping with that same mindset, but just making sure that you're not holding on to investments that are tanking. So if you invest in a particular company for a long-term investment strategy and that particular company is going out of business, you definitely do not need to hold on to that investment just because you plan to keep it for the next 20 to 30 years. So I definitely think that you do need to have the flexibility to pivot in your investment strategy if it's not working out. So now that I've explained what long-term investing is, as well as some of the pros and cons to long-term investing, I definitely want to make sure that I highlight some of the accounts that you would use for long-term investing, just so you can kind of get an idea. So for one, 401ks would be considered long-term investings. So those are employer-based retirement accounts that allow you to put into them for your retirement. So typically you won't be able to access that account until you turn 59 and a half. So additionally, IRAs or Roth IRAs, which are individual retirement accounts, those are also retirement accounts that you're unable to access until you turn 59 and a half. So those should be considered long-term investment accounts as well. Now, brokerage accounts can swing either way. So you can have a brokerage account and have a long-term investment strategy within your brokerage account, but you can actually access that money whenever you please. So there's no age restriction or time investment restriction on being able to access that account. But I do want to make sure that you guys know that if you do purchase something within your brokerage account, if you hold that investment for less than a year, then you are going to be taxed on the capital gains with a short-term investment instead of a long-term investment. So just keep that in mind. So I personally think that long-term investment strategies are really good for people if you're interested in purchasing a home and putting that long-term investment into a brokerage account so that you can access your money. So that is one of the strategies that I personally use in order to purchase my first home. I did a long-term investment strategy within a brokerage account so that when I made those financial goals with that time horizon that I set out for, that I was able to pull my money out without having a penalty as if I was to pull it out of my IRA or something like that. So I was able to access my money for whatever I needed it for. So I also personally use a long-term investment strategy for my extended emergency fund. So I have an emergency fund that I keep in my bank account that I have easy access to if something crazy were to happen or an emergency were to happen. But I also have an extended emergency fund outside of my bank account that I keep in a brokerage account for larger emergency funds that I have invested for a longer period of time. And so I love this strategy because I don't have large amounts of money sitting in my bank account not getting me any interest. And so I like to keep a set amount, $5,000, in my bank account so that I have easy access to money, but I don't like to keep a large amount of money that's not making me any money. So I actually have a long-term investment strategy for my emergency fund as well, that I have money there outside of my bank account. So that way I'm continuously making money while I'm also making sure that I'm covering myself in case I have a large sum emergency. So something else that I think the long-term investment strategy would be good for, of course, besides paying for your retirement, in my example that I gave of saving to buy a house, I also think that long-term investments would be really good for saving for your kids. And so if you have kids, I don't have them at the moment, but as soon as I do, I'm going to open up a brokerage account on their behalf. And I'll make sure that I'm saving long-term for them, just so they have money if they want to go to college or just to set them up so that they want to purchase a home in the future. So I definitely think that long-term investments could be good for saving for your children as well, if you have them. So now that I've discussed what long-term investing is, as well as some pros and cons to it, and some investment accounts that this would apply to, I now want to switch over to short-term investing and what that is. So short-term investing is any investment that you hold for less than a year. And so this, of course, is going to vary from investor to investor, but according to the IRS tax implications, any asset that you hold for less than a year is going to be taxed at a rate of short-term investing. Now, I like to consider short-term investing anything that I hold for less than 5 years. Now, I may hold short-term investments for more than a year, depending on what I'm actually saving the money for, how the investment is panning out, but I like to consider anything less than 5 years a short-term investment. Now, the pros to short-term investing is that you can make a lot of money very quickly. Now, on the contrary, a con to short-term investing is that you can lose a lot of money very quickly. And that's because you simply just do not have enough time on the horizon in order to make that money up if an investment particularly did not go well in a short period of time. So you can think of short-term investors like day traders, option traders, swing traders, and then in my aspect, I typically buy stocks, but I like to buy growth stocks. So I like to invest in tech companies or new emerging companies. And so all of those type of investments are considered more riskier investments as opposed to investing in your long-term investments, such as like mutual funds or ETFs or, anything that you're putting into your retirement account that you are going to hold for 20 plus years. Now, the distinction between a good investor versus a bad investor is being able to manage your risk. And so being a short-term investor and being good at being a short-term investor is going to be all about your risk management. And what that means is that you do not get emotional about investing. And so if investment is not going particularly well for you, you need to cut it off before you have drastic implications and you lose a ton of money. And so if you're able to manage your risk, you can definitely make being a short-term investor work really well for you. And so I do want to be mindful that some of my viewers may not know what risk management is when it comes to investing. And so risk management means that you are able to identify how much you're willing to risk per investment. And so, for example, if you purchase a stock that is worth $100 and you have a risk management of 10%, which is $10, then once that stock drops to 10% or to $90, you cut your losses. So you don't sit here and you try to make up the money and you do crazy things to try to buy low and sell. Like, no. You try to short the stock. No. You cut your losses. And so being mindful of what your risk tolerance is and being able to identify your risk management strategy will definitely save you in the long run if you're doing short-term investing. So definitely have a risk management strategy in place either way, but your risk management might be a little bigger if you're doing long-term investing because you have more time to make it up as opposed to doing short-term investing. But short-term investing, you can be really profitable over a short period of time. Now, with great risk comes great rewards, but also with great risk comes great downfall. So one of the cons to engaging into short-term investing is that you can lose a lot of money very quickly, especially if you don't know what you're doing and you don't have good risk management in place. Now, this can be seen even outside of investing in stocks. So I've known you've seen a lot of people, especially here on YouTube, who flip houses, for example. Now, if you don't have your contractors in place, you don't have the right formulas in place for how much estimates are going to go for, how much materials are going to cost, you can really lose a lot of money with flipping houses. So it's definitely something to consider. But houses are a great example of something that can be considered a long-term investment versus a short-term investment. So if you were to invest in a property and you wanted to make it a long-term investment, that's going to dictate what type of property you buy. And it's going to be significantly different from the type of investment or property that you buy if you're doing a short-term investment. So for example, if you're doing a long-term investment on a property, you're going to pick a property that may be in an up-and-coming neighborhood. It may be a little distressed, but you're going to be looking for something that you can put tenants in that are going to rent for you and pay your mortgage over the next 30 years. As opposed to doing a short-term investment for a property, you may only hold that property for 3 months or 60 days, depending on how quickly you want to do a flip. And you're looking for a more distressed property, because the more distressed the property is, if it's cosmetic, then you're able to make those quick upgrades in order to make it more appealing for someone to purchase for their own home. So you're not planning on, finding quality renters or quality tenants. You're not looking for, a great neighborhood and investment over a long period of time. Even that example of taking a home and either treating it as a long-term investment versus a short-term investment, you're definitely going to be looking for different qualities when you're trying to make that investment. So you definitely can take that example and shape it into different investments all across the board. Whether you're investing in businesses, you're investing in stocks, you're investing in, jewelry. It's really up to you guys. There is a ton of different investments that you can make, but I just wanted to show you that example of how you can literally take the same thing, but depending on your strategy, it's going to dictate how you look at that investment. So when we look into the accounts for short-term investing, it's almost always going to be a brokerage account. Simply because you can't use retirement accounts or Roth IRA accounts, 401ks, like you can't do that for short-term investing. So it's almost always going to be some type of brokerage account or some type of account where the person that's doing the investing will have easy access to the money once the investment has been sold off. So just one little tidbit that I want to add in there is that you can definitely engage in short-term investing without being a day trader or an options trader or all of these risky investments. You can definitely do short-term investments that are way less riskier than those options that I mentioned. So don't scare yourself into thinking, oh my gosh, I'm gonna be a day trader, or day trading is so scary. Like, you can definitely make, you know, very profitable trades without being a day trader or trading options. So I don't want you guys to think that that's the only way that you can make profitable investment decisions. Short-term investing is definitely way more hands-on than doing long-term investing, and that simply is because you have a lot less time in order to make your investments profitable, as opposed to if you were doing long-term investing. And so you have to constantly, or definitely should at least, be checking your accounts consistently, keeping up with news, keeping up with current trends, in order to make sure that your investments are not tanking, because you don't have that recovery time that you would have if you were doing long-term investments. So that's definitely something to keep in mind. It's not a strategy that I would recommend for people who just kind of like to set things and just forget about it. I definitely think if you're going to engage in short-term investing, that you need to have an active and hands-on approach to it if you want to be profitable. Alright, you guys, so now that we've discussed long-term investing versus short-term investing, the pros and cons for both, as well as the associated accounts for each, let me know what your investment strategy preference is. So do you think that you're more a long-term investor? Do you think you're more so a short-term investor? And what type of things do you like to invest in? So know that I actually do a combination of both. So I definitely am a huge advocate for investing for retirement. So I have the 401k, I have a Roth IRA, and then I also do short-term investing. So I told you guys earlier this year that I'm very interested in learning how to day trade. That is a very slow journey. I know that's going to take years for me to be profitable and to be really good at it, but that's definitely something that I'm investing in, the learning process and the education for that right now, so they can pay off in the future. I also like to do short-term investing because I love investing in growth companies, and so I just like to have like a short-term investment account outside of my long-term investment accounts. So let me know what you guys are interested in and what you guys are investing in. So as always, thank you guys so much for watching this video. If you enjoyed it or found it helpful even a little bit, please make sure to give me a thumbs up. It really helps my channel and pushes it out to a larger audience, so that I can be one step closer to financial independence, which I think is everyone's goal in securing a more financially stable future for themselves. So as always, I really appreciate it, and I'll see you in my next one. All right, bye.